Well, good morning, traders and investors. Today is October 14th. It's the last day of the second week of October. This is my birthday month. I'm counting down to October 29th, where I'm going to be 50 years old. Can you imagine? I still can't get over it. I'm still thinking I'm 25, 26, 30, but man, it gets there fast. And I'm sure a lot of you guys know what I'm talking about, and gals. Let's talk about the market. Let's get into it right now. And for those who don't know me, my name is Roger Scott, and I'm the head trader for Wealth Press, but I'm sure by now you guys know who I am. Let's talk about the market. Let's talk about the economy. There's a lot of stuff going on right now. We had jobless reports. I specifically waited for 8:30 Eastern time because I wanted the jobless claims to come out, and I'm not happy with what I'm seeing. Let's talk about the market. So global stocks dropped Thursday as hopes faded. The U.S. leaders will agree on the new economic aid before the November 3rd election. Trump is negotiating. He's negotiating. Who knows what will happen? He's done this before, but we will see. Europe countries impose new limits on businesses to contain the pandemic. That's bad, really, really bad. Thank God Asia is not doing that, but Europe, not good. Market sentiment began to sour Wednesday after U.S. Treasury Secretary Mnuchin said he and congressional leaders were far apart on a new aid for struggling economy. Consumer spending, the main U.S. economic engine, that's right, weakened after earlier additional unemployment benefits expired. That's what I'm focused on, big folks, consumer spending. Why? Because it drives 2/3 of this country's economy. That's why I'm really focused on all the consumer sentiment, retail sales, all the reports that are related to consumer spending. Fears are rising that Europe is running out of chance to control a resurgence in the COVID outbreak. I think we're there. As infections hit record highs in Germany, Czech Republic, Italy, and Poland, France slapped a 9 p.m. curfew on many of its biggest cities, and Londoners face new travel restrictions. That's bad, 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 bad. Investors are looking ahead to the latest U.S. jobless claims, which I'll get to in a second, which are expected to remain elevated 7 months after the viral pandemic erupted and after the expiration of federal unemployment aid for millions of Americans. Major U.S. companies have also began reporting earnings. We are right now with bank stocks, and they have been mixed. One company's been positive. One company's been better than expected. The thing with bank stocks, if they have a investment banking side, they're doing pretty good. I think Goldman outperformed pre-COVID levels, but if it's just a savings and loan like Wells Fargo or Chase, not sure about how that's gonna go. So we will get into earnings later this week. I want to see maybe 10-15% of the S&P release so we can get some type of a gauge. Once we get a gauge, then I'll get into deeper discussions. Crude oil slipped below 40. As you guys know, frackers in the U.S. pay about $41 a gallon. I can't speak this morning, to process a barrel of oil. So if oil is below $39 a barrel, that means they are actually losing money. They are losing money. This is very, very bad, and it's just telling us that nothing is really going away. Now, if you look at the jobless claims, we're above the 4-week moving average. That's very, very bad. At first, about 6-7 months ago, just as the report said, the numbers were coming down below 1 million, and they are below the moving average for the most part. But look, we can't even beat the consensus of 825,000. We got 898,000 new claims. And look at this: March, April, May, June, July, August, September, October. We're talking 8 months. We barely went from like a little over 1 million to like 898,000. That's bad. That's very, very, very bad. Now let's look at retail sales. That's another report that's coming out. That's a very major report. So, the number's not out yet. I guess it's going to be out in a minute. All right. It was supposed to be out at 8:30. It's already 8:44. But I guess we're not there yet. I'll check. Let me check a few things here. Let's see if I can get it for you, because I really want to see retail sales. Don't you? No, just elevated. Yeah, jobless claims elevated. Let's see. Any reports? Maybe the report. Let's look at top stories. Maybe the report is delayed a little bit. No, just the fact that the report is out. See that? 898 layoffs remain high after 7 months. These headlines will tell you everything. Elevated. Very, 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 very bad. And you could see here, Morgan Stanley, we were just talking about bank stocks. Morgan Stanley is an investment banker stock. Morgan, Goldman, those are investment bankers. 25% right. Trading is going up. People are trading. They're staying at home and trading. So again, the market is not looking all that pretty. Now, I want to talk about momentum levels. I've been talking about momentum levels, but you guys need to see this. This is the number of stocks in the NASDAQ 100 trading above the 200-day moving average. This is 5 years. We're at the highest level we've been in 5 years. Let's look at 10 years. We're at the highest levels we've been in 10 years. Let's look at 20 years. This is just the NASDAQ 100. We were at a higher level here back in 2009. And look at what happened. We sold off. We sell off every time. Now, here's the thing I want you guys to understand. This is the NASDAQ 100. If you look at the NASDAQ, if you look at the overall NASDAQ, let me show you here. It doesn't look as bad. So this is the NASDAQ 100. Look at 50-day line, 83%, 88%. But if you look at the NASDAQ Composite, only 66%, only 68%. So the overall NASDAQ, momentum levels are okay. But the FANG stocks, the Apple, the Nvidia, the Facebook, those stocks, the ones that are driving the NASDAQ 100, they are overbought, the large cap NASDAQ stocks. And not just those, all of the NASDAQ 100 stocks. Remember, the momentum levels don't use market cap. They use percentage. And you've got 83% of stocks in the NASDAQ 100 trading above the 50-day moving average. We peaked out here. I drew the circle about 5 months ago. We went down to about 50th percentile, and just as soon as we went down, we didn't go all the way. That's bad. So momentum is still pent up, and right as soon as we go to the 50th percentile, we went back into the 80th percentile. Now look at here. What happens when we enter this window? Look at this. This is 20 years. It's actually not. It's actually about 12 years, or let's say 14 years. But let's just say, for argument's sake, what happens to momentum every time it goes above 80? It falls down. It gets overbought way, way, way too fast, okay? So that's a major, major issue, and that's telling us that you guys should be looking at broader stocks, S&P stocks, Russell 2000 stocks. Don't be focused on the top NASDAQ 100 stocks right now because A, their upside is very, very limited, and B, their momentum levels are through the roof. And again, not the overall NASDAQ, not the S&P, not the Russell, but the NASDAQ 100. And they have been leading the market over the past several months, and they are a little bit overdone. As a matter of fact, if you look at the chart, you will see here, here, let me go to 1 year. You will see here that we haven't reached the top yet. We haven't been able to reach the all-time high, and we started backing off and going towards the moving average as we're divergence. RSI couldn't even hit overbought before moving down. So keep your eye on this right now. Before getting bullish in NASDAQ 100, I think we're going to see a little cool off, or maybe another trading action below the 50-day moving average, because it just doesn't have the mustard to go higher unless the Fed comes out with a stimulus agreement. If they come out with a stimulus agreement, that may change things. But as of right now, the NASDAQ 100, the top NASDAQ stocks are overbought. Let me show you what those stocks are so you guys can see them. Tesla, Nvidia, Zoom, Nvidia's right here, Melly, DocuSign, all the big stocks that have been really, really rallying. Tech, healthcare stocks, mostly tech, some healthcare, but the NASDAQ 100 is overbought right now, and you might want to stay away from it, okay? So what should you be looking at right now? Well, at all the dogs on Wall Street. What I would be looking at right now is the weakest NASDAQ 100 stocks, because the NASDAQ's the most overbought index. So what's the most overbought NASDAQ stocks? You may ask. Let's look at some of them. BMRN. Let's look at BMRN. BMRN. That's the stocks you want to liquidate right now. See, strong sell. They had a bad report come out. Look at this stock. It's a dog. It looks like it's going to go lower. BMRN. Let's look at a few others. Guild. And these are biotech stocks. They're just not doing well. They're not doing well. And biotech has been overbought, and there's a lot of shakeout because if you're not a COVID-19 vaccine stock, there's just not any market cap in there. So Guild, this BMRN. How about Western Digital? Oh, Western Digital. Nobody's doing hard drives anymore. Look at this thing. Again, just hovering near the lows. The first sign of the market having a major sell-off, guess which stocks will go down first? Citrix, even Citrix System. That's competitor to Zoom. Let's see here. Yeah, I want to know about this. It's still above the 200-day moving average. But I'm going to tell you right now, Cisco, Western Digital, WBA, let's see here, WBA. Those stocks are just bad. I mean, look at this. Look at Walgreens. So here are the ones that I'm not liking right now. BMRN, Guild, WBA, Western Digital. Let me look at Cisco. Yeah, Cisco's not looking good. And let me look at Intel. And remember, Intel is a NASDAQ 100 stock. Yeah, it's below the 200-day. I'm looking for more downside. Remember, the weakest stocks in the most vulnerable sector or index are the ones to go down the most. NASDAQ 100's the most overbought, so we're looking at relative strength to sell the weakest NASDAQ stocks. BMRN, Guild, WBA, WDC, Cisco, Intel. I don't know about Citrix. I would leave it to these. 1, 2, 3, 4, 5, 6. The 6 stocks on our chopping block. Now, before I let you guys go, and again, BMRN, Guild, WBA, WDC, Cisco, CSCO, and INTC. And don't bottom pick. I know you want to. Don't do it. The NASDAQ is grossly overbought. Take advantage of it. I just gave you guys a good top-down approach to market analysis and gave you the sector that's showing the most vulnerability. Now, don't go anywhere. Wall Street Trading Icon, just let us know things are about to get real today at noon Eastern Time. Our source is finally going to expose a new technology that represents the single greatest investment opportunity in the last 30 years. Did you just hear what I said? The greatest investment opportunity in the last 30 years. This tech could be the most profitable tech opportunity since the rise of e-commerce. Man, oh man. Social media, or even the internet itself. Man, I'm getting excited. I don't want to miss out on this. And he has zeroed in on the perfect play to capitalize all of this. Click on the link below to catch this shocking reveal. And again, finally, new technology that represents the single greatest investment opportunity in 30 years. I don't think you can afford to miss that. Follow the link below, catch this reveal before it's over. I'll be there. Don't miss out. Talk to you guys soon. And if you guys are enjoying these videos, give me some feedback. Comment below the video. Send me an email at support@marketgeeks.com. I want to hear from you. Good, bad, ugly, I don't care. Talk to you guys soon, and I'll update you tomorrow. It's Friday tomorrow. Bye, guys.